here are the top business stories making the rounds. The World Bank has urged Nigeria to enforce fiscal discipline, rebuild financial buffers, and save excess oil revenues as Middle East tensions push crude prices across $100 per barrel, far above the country's 64.85 benchmark. Presenting the April 2026 Nigeria Development Update in Abuja, lead economist Fisiha Hale said the conflicts involving Iran, the United States, and Israel could boost revenues but heighten inflation risks. The bank recommended tight monetary policy by the Central Bank of Nigeria, exchange rate flexibility, targeted social protection, and reforms such as reopening petrol imports and reducing trade barriers. While Nigeria's economy grew by 4.0% in 2025 and inflation eased to 15.1% in February 2026, the bank warned that rising global costs may strain households and slow recovery. It stressed that poverty remains high and called for stronger investment in human capital, especially early childhood development. Finance Minister Wale Edun said the government is managing risks while leveraging high oil prices, noting production has reached about 1.84 million barrels per day. He added that reforms under President Bola Ahmed Tinubu have strengthened the economy, but sustained growth will depend on disciplined policies and increased private sector investment. Nigeria's newly proposed livestock development roadmap is set to revolutionize the economy with the potential to create 350,000 jobs within the next 2 years and tap into a market valued at 33 trillion naira. President of the Abuja's Chamber of Commerce and Industry, ACCI, Chief Emeka Obegolu, disclosed this during an interview with newsmen while hailing the initiative as a landmark shift toward food security and industrialization. Obegolu commended President Bola Ahmed Tinubu for the strategic establishment of the Ministry of Livestock Development and also noted that a dedicated ministry is the missing link needed to drive focused policies and attract the private sector. Beirut officials say the decision by Israel to exclude Lebanon from the recent U.S.-Iran ceasefire has deepened increased economic uncertainty and worsened business conditions in an already fragile economy. The Islamabad truce announced to pause broader hostilities and open talks has not halted Israeli military operations in southern Lebanon and beyond, undermining confidence in commercial activities and market stability. Business survey shows Lebanon's private sector contracted sharply in March, with Lebanon's Purchasing Managers Index sinking to a 17-month low amid reduction, falling new orders, and a slowdown in exports as firms cite war-related disruptions and demand consolidation. Economy Minister Eme Basit has repeatedly warned that ongoing conflict threatens key sectors, livelihoods, and economic recovery as markets suffer from rising costs, displacement, and shrinking trade. Analysts estimate Lebanon's GDP could extract by 12 to 16% in 2026 if fighting persists, reflecting deepening losses across agriculture, retail, and hospitality, while displacement and access constraints erode household incomes and food security. And that's the latest from business and global markets. I'm Gladys Emmanuel. We'll be joining Halima and Abubakar for the newspaper reviews after the break.